In this video, we are going to speak about 5 different job profiles that a CA, CS, CMA or any student who holds a professional qualification should definitely not look forward to work in, at least in the initial phase of their careers. Number 1 is KPO or BPO industry, where you are being offered profiles which are very similar to R2R or account receivable, payable. I personally feel that these profiles do not offer any sort of mental stimulation or intellectual stimulation. You do not learn much. You are majorly into a very manual kind of working, where you are merely following a particular SOP that was being followed by your predecessor and will be followed once you leave the job. So working in a BPO KPO profile, especially in R2R, finance accounts, or any profile in BPO KPO where there is not much of where you don't have to put your mind much, I think those profiles should be completely ignored. The second profile that I want to speak on is fund management, PE funds or hedge funds or crypto funds these days. This sort of profile. Why? Is the work that bad? I would say it is not extremely bad. It is quite average in terms of learning. However, I personally feel that there is not much exit available, exit opportunities. Where will you go once you leave the industry? In which companies are you going to work? Let's say if you leave your current organization, though there are a lot of companies who are into fund management and fund accounting. I'm not saying fund management. So a lot of people feel that if I'm talking about fund accounting, you're working in PE funds or VC funds. No, you're not working for any PE or VC fund. They are your clients and you are probably doing some back-end work for them. Maybe consolidation, maybe accounting, maybe calculation of NAV, maybe taxation or getting them audited. Again, that is a very manual SOP driven work. The work is completely defined by the management. You are not putting in any effort. By effort I mean you're not putting in any mind as such. Further, there is nothing much extra you can do to make it better. That means you have to just follow a certain thing and you don't have to mingle with the procedure much. So there is less learning opportunity, there are less exit opportunities. Now by exit opportunity I mean in a different industry. You will probably stay in fund accounting or fund administration only. So I think in my personal opinion the views might vary from trainer to trainer, and I'm pretty sure if anyone from these industries will be working or watching this video, they might not like my advice, but this is what it is. So fund administration, a big no from my side. Third one is finance and accounts in any company. So if you are a professional, why to work in AR, AP roles, or maybe you are taking care of the tax compliances, or maybe you are just processing a certain MIS. I personally feel that if I'm a professional, I should get something where I can put my brain and where my analytical capabilities can be put to use. So this one profile doesn't give you that leeway. Again, this is a very set pattern to work. You will probably be handling huge data, and you will be working on Excel sheets, spreadsheets. You have to don't put any mind in this. Just have to follow certain steps to get the work done. So finance accounts in general. Now what you need to do is you need to look at the job description. There are certain finance accounts profiles where they give you an opportunity to put your mind, or there are certain automation projects. Those are still better. So for this you need to clearly communicate with the talent acquisition team, with the hiring manager or supervisor, and also have a look at the job description to understand the profile better. But in general, finance accounts, AR, AP, O2C, P2P, these sort of profiles, I think in my personal opinion, if you are a professional, you should definitely ignore. The fourth one being credit manager in a bank. Now many might come and say, "Ye to sir achhi profile hai. This doesn't look bad or sound bad." Yes, I partially agree, and I appreciate that you are questioning me on this. But in case if it is a retail loan means smaller ticket size, personal loans, auto loans, machinery loans, maybe there can be other agriculture loan. If you are into retail banking segment and not wholesale banking segment, where the ticket size is very low, I think there are not many exit opportunities available. Even though if you are working in a even moreover, in case if you are working in a wholesale banking setup where the exposure is bigger, a lot of credit rating agencies might consider your profile. But in case if it is a retail loan, the possibility to exit is very, very low and minimum, and probably you'll be revolving around different banks in your entire career. In case if you like it, you can go on and pursue this. But as a consultant, I get a lot of requests over LinkedIn, and most of it is coming from either credit managers or people who are working in Big 4 global firms in different teams, where they want to get into Indian assignments or want to completely change their domains. So as a consultant, as a professional myself, as a CA myself, my request would be not to consider this profile in the initial phase of your career. Later on, you can move into such profiles in case if there are any location restriction or any sort of restriction. The fifth and the last one, which is a big no from my side, is UK US taxation profile. Now my question is, we are working in Indian geography. What are you going to learn if you work in a UK US tax kind of profile? Definitely there are a lot of companies who are setting up their GCCs here and their back offices here, and you will be probably employed there. But what about, what you're doing is merely compliance work. Tomorrow any technology can come or the rule can change in that geography for whom you are working, and you might be out of the job. There's a big possibility in that sense. Probably if you want to work in a taxation profile, either go for a consultancy firm, or in case if you want to explore the industry side, the corporate side of it, at least be in the Indian tax side. Don't work in a UK, US, Australian taxation domains. There's nothing much to learn. Maybe you're following a certain mechanism, and even if there is something to learn, that you're doing something related to their taxes, that is completely useless here as an employee. In case if you want to develop your own practice, in that case it sounds good. But in case if you want to stay as an employee in the long run, I think working in these domains is of no use. Better work in Indian domains. So these were 5 basic domains, in my opinion, that you should not explore in the initial 5 years of your career. So I wish you all the best. We will be coming up with a separate video on a topic which are the 5 profiles which are more sought after profiles for any chartered accountant, cost accountant, or a CS, or a MBA, or a CFA. We'll be coming up with that information in the later videos. But as far as today is concerned and this video is concerned, I think this much information will be very useful for you. Thank you, and see you in the next video.